Welcome back, everyone, to the King of Uranium Stocks round 3. We have 8 companies left, and after today, we'll have 4. The rules are right here, and just a quick reminder, there are some great companies that have had unfortunate matchups so far, and that trend will probably continue. And yes, by the end of this, I'm pretty sure that everyone will hate me. So I have just basically, 2 more videos left on this channel. So it's been nice while it lasted. Okay, so I don't want to dish on any company or anything, but up to now, I think Apia has had the easiest path. And realistically, I'm a bit surprised, although, I'm in charge of this, so I shouldn't really be a bit surprised. It's the only one that I'm kind of surprised has made it this far. Because realistically, in terms of measured upside or measured anything really, it's been really hard to measure. Versus global also doesn't have a specific upside, but there's a lot of pounds there, and there's PEA. Then we're going into feasibility in a region where it should be quick to advance, and there's a cash flow to back it. Global is the big winner here. Then on the flip side, you have Vimy and Encore, both having some incredibly tough decisions to get to this point. And both, again, in a matchup where someone's going to lose that may not deserve to lose. Really like both of these companies. The the winner of this one for me is going to be Encore. And the reasoning for that is because not only has both these management teams are really good, but if we're looking at a speculative position that could have big upside and limited downside, I would go with Encore because while they're both great and have big upside potential, Encore has really had a strategy of raising at good times. I could debate that earlier, but raised at good times and has not been spending too much money on trying to be an active company. And Vimy has done a lot of advancing with its activity and has done a great number of things, but they've spent a good deal more money. And so here, I'm going to go with Encore. It is very speculative, and especially for this point, but they both are. And it was another tough decision, so don't hate me too much. It's times like this that I'm increasingly hating myself for making this video, because this is another incredibly tough decision. You have, on one hand, Denison, which could be the lowest cost producer in the world, and on the other hand, Bannerman, which could be one of the higher cost producers. But Bannerman is completely ready effectively, and they are both big deposits. But the question for Bannerman is price, and the question for Denison is permitting and other such shenanigans. So I own decently sized slash probably too big positions in both of these and really like them both. I'm going to give the edge to Bannerman because it is very ready and they'll have an updated DFS as the price moves up. And Denison, it I really just it's the permitting. It's the permitting, and you never know how long that'll take. And so while I think it'll eventually get done and Denison will eventually make a ton of money, if we're talking about definitely being ready for if the price moves up a lot, that's why Bannerman wins this. So here we are with the last matchup of round 3, and it is another very difficult choice. Two lower risk, high quality names in the uranium space, both whose main downside, I guess you could say, is upside, in that they're not going to be explosive winners in the cycle. So originally, when I was considering this, I was thinking maybe less downside with the physical, and if you add enough leverage, it can kind of pass Cameco. Then I thought, hang on, that's not really fair to Cameco, because Cameco is another company that you can get leverage on, and there is safety enough, there is quality enough that I would probably feel comfortable using some leverage. Now, I'm not saying you need to buy either of these with leverage. I'm saying that if I were trying to match the risk reward of the two, that's how I'd think about it. Now, I don't think there's a bad choice here. Either way, I could see it, and I could see being totally satisfied with my choice. I'm going to go with Cameco though, because I'm kind of biased towards having a cash flow and buying a company rather than just a commodity. Could that be a mistake? Maybe, but realistically, I would be super happy holding Cameco for a long time. And if the cycle just kind of goes along in a way that I don't think it's going to go, but theoretically it could go, Cameco would be the winner in that case, and Cameco is the winner of the two. Thanks for watching, everyone. Remember, never investment advice, never suggesting to use leverage. I'm just trying to compare things. Three of those choices, three of those decisions were incredibly difficult for me, at least. Maybe you have an easy choice making something else. And so we're left with four great companies with great potential, and I will be doing rounds 4 and 5 in one video, the next video in this series, and that will be coming up soon. Until then, have a great day.